Hi, everyone. Welcome to Blockchain Monologues. We're going to talk about the proposed Rule 195, which is an exemption from having to register securities with the SEC. Just a little reminder, none of this is legal advice. They're just my opinions and my opinions only. They're not the opinions of anyone else. So as most people know, it's been a very controversial proposal that she's run up the flagpole. Rule 195 provides a 3-year safe harbor from having to register the things that you are offering and selling pursuant to the registration requirements of the Securities Acts. There's a couple of items that are proposed. We're going to go over just a couple in this segment. One, the exemption is qualified as, except as previously provided in paragraph D of this section, the Securities Act of 1933 does not apply to any offer, sale, or transaction involving a token as defined herein, if the following conditions are satisfied by the initial development team. What are they? So, one, they intend for the network on which the token functions to reach network maturity, as defined herein, within 3 years of the date of the first sale of the tokens, and will undertake good faith and reasonable efforts to achieve such status. Well, what happens afterwards? We don't know yet. It's liable to remain a security. You've got 3 years to build it, which is a long time, right? Number two, there's disclosures that are required under paragraph B of this section, which must be made available on a freely accessible public website. We're not going to go into the disclosures, but they rhyme with similar types of disclosures that you would provide to accredited investors pursuant to Rule 506 by furnishing them with a PPM. It's liable to require additional information, heightened disclosure, because we're not dealing with accredited or non-accredited investors here. There's no distinction between the two, right? So the token must be offered and sold for the purposes of facilitating access to, participation on, or the development of a network, right? You're going to take the money, you're going to build the network, and that token must facilitate access to the network, unlock features and functionality, and likely act as a base payment on the network. Right? 4 is the initial development team intends to and will undertake good faith and reasonable efforts to create liquidity for users. Now, when I read that sentence, that's like a license to manipulate a market, right? There are a lot of things that are not said in this particular provision, which we're not going to go over now. We'll go over in a later segment, but let me finish reading. If the initial development team attempts to secure secondary trading of the token on a trading platform, like an exchange, it will seek secondary trading platforms that can demonstrate compliance with all applicable federal and state law and regulations relating to money transmission, anti-money laundering, and consumer protection. So the first and only venue, to be honest with you, right this second that comes to mind is Coinbase, right? You are required as an exchange to register under the 34 Act or seek an exemption from registration under the 34 Act by registering with FINRA as a broker-dealer and operating an alternative trading system, or ATS. Not going to go into those processes right now. So there are a lot of powder kegs in this specific aspect of the proposal, right? It's very broad as to what qualifies as a trading platform. How will they demonstrate it? Well, usually they're registered. Coinbase is really the only one I can think of. I can't say Binance US because I haven't verified whether or not Binance US has, in fact, 1, registered under the 34 Act, 2, which I don't think they did, 2, registered with FINRA as a broker-dealer. Forget it. That's out of the question for them, at least for now. Or has registered as a money transmitter in each applicable state on a state-by-state basis and can demonstrate what's required in this particular provision, right? And then number 5, you file a notice of reliance on this exemption in accordance with the paragraph C of this section, which is the same thing that you do with a Form D, which is you have to file it 15 days after you make your first sale, or in some cases, some exemptions you are required to file that before you make your first sale, right? And there are a lot of other exemptions which I'm not going to go into. So we're going to actually stop there, and I'm going to kind of just summarize what this particular section of this proposal means. So you've got 3 years to build your network and create the functionality that you disclose on your website and also in your GitHub, and you should have a README file. You should also have the disclosure that is on your website as a PDF, which should also be in your README file or referred to in your README file, right? At on a later segment, we're going to go over some of the types of disclosures that are required to be made and what we have found through issuing securities for quite a while, what good practice and good form is, right? None of this is legal advice, by the way. This is only an attempt to go over this proposal because a lot of people in crypto have a lot of questions. They read this and they immediately draw certain conclusions, which we want to dispel. This takes a rule change, it takes deliberation, it takes public comment, and we're nowhere near that. This is the thoughts of a single commissioner who expressly states in this narrative, in this proposal, that it's only her opinions, it's only her thoughts, it's not those of the SEC, and it's not those of her colleagues, the other 4 commissioners or any other staff member of the SEC, right? So this is what she is thinking about. And at a later time, we're going to go over some of the next few provisions of this proposal in detail. So, but for now, thanks for joining us, and we'll see you on the next edition of Blockchain Monologues.